Welcome, everybody. Welcome to Zoom at 8. My name is Julianne Peterson, and I am your host every Tuesday night for Zoom at 8. As well, I am a loan officer for Old Capital Lending. So we are a premier provider of debt and consultative solutions. So if you're working on a deal, and you know what, it's kind of like giving birth. You don't have a whole bunch of giving births. You only have a couple in your life. I've had 4, but you only have a small amount of opportunities to get with the right lender. You got to make the right decision, and then you stick with that lender. All right. And I would love to be that person for you. We educate, we provide you with a lot of services. We've got speaker series Eric went to last week. We have the Old Capital Conference. We have the Old Capital Podcast, and we have Zoom at 8. Amazing. So if you're looking at a deal, I'm going to need your T12, your rent roll, the offering memorandum, and your underwriting. And tonight is going to be like no other because we've never had a flood expert. So DJ McClure, who serves as the Vice President of Sales and Business Development at National Flood Experts, is joining us. So DJ, he works with National Flood Experts to deliver tailored cost-saving solutions for flood zone properties across a variety of commercial real estate markets. His company has saved clients over $15 million in insurance premiums and added nearly $300 million in property value since 2014. DJ is backed by a team of experienced licensed professionals with over 60 years of experience and are dedicated to providing clients with education, guidance, and the best possible solutions. So I look forward to having a very educational conversation and how you can help our investors uncover hidden NOI in flood zones, as well as how to remove a property from a flood zone. So before we get started, if everybody would go to the right-hand side, change your view to speaker view so we can give all of our attention to DJ McClure. DJ, welcome to Zoom at 8. How are you?
I'm good. This is a long anticipated appearance. So
yes.
I was very excited.
November? We talked in November? I can't remember now.
That's right.
Well, that background of yours is perfect for our conversation. I mean, you're in Tampa, right? Or Jacksonville? Can't remember.
Tampa, correct.
Okay. So you're in Tampa. You know a lot about insurance policies. JT Lynch is in the house. He knows a lot about insurance. We are hearing, and JT would confirm this.
Yeah, I just want to add, the way it works with us, like we're not afraid of DJ. We're friends. Like if there's a property in a flood zone that looks like it can be managed, he's the first person I reach out to. So he's a great asset for sure.
Thank you.
Oh wow, look at that confirmation. I love it. So you're thinking about water. This is the conversation tonight. We're talking about water and all the damage that can be done from ignoring water. But sometimes we've got these areas that say they're in a flood zone, but they're really not. Or we need to kind of shift the conversation with whoever determined that, right? So I'm going to let you go ahead and introduce yourself with some of the other information that you're going to share with us, and let's go.
Absolutely. I've got a few slides just to keep organized, if that's okay to share.
Sure. You're ready to roll.
There it is. Well, really excited to talk to everyone. We'll keep tonight super educational. Feel free. I've got a Q&A slide at the end for discussion, but if any of this sounds like Greek and you want to stop me, feel free to ask a question. I don't know, Julie, what your format is for that kind of thing, but I don't mind keeping it, kind of interacting during the chat. So again, my name is DJ McClure. I've been with National Flood Experts about 5.5 years now. It's funny how the years pass, when you're doing something fun, exciting, and in a niche industry. We're kind of a one of a kind company, and I don't have a background in insurance. I have a background actually in tennis. I was a tennis pro for most of my 20s. I like to say that tennis was my sales training because every other tennis pro wants to steal your clients constantly. But yeah, I spent most of my, after college years on a tennis court as my office, and then, kind of made some transitions. And I've always had an interest in real estate. And so when my wife and I moved from Puerto Rico, it was actually my last tennis job was a resort down in Dorado. So this background was a lot more like what our resort looked like realistically. But when I got to Florida, I met this company, and I was just really inspired by what their mission was, and it was a combination of an engineering foundational expertise combined with the flood insurance expertise. So our president had actually worked in both industries and kind of found there was this underserved, overlap in between that. From an engineering side, there's a lot of solutions that exist that weren't really being brought to the mainstream, front of property owners around the country. And then the real estate expertise is really the third peg, that kind of brings it all together, because understanding all these different situations that we run into on the real estate side, and that's where we find what all the different problems are that there are to be solved. And so we'll talk about some of that tonight. Just a little bit more about me. It's my wife and I, married 7 years. So she's my number one supporter. I've run 3 marathons now, painfully. And so this was one that we did over in Cocoa Beach, down here in Florida. I'm a big tennis fan, no surprise, right? Kind of told you a bit about that. And I'm also a multifamily investor, so to kind of put that out there, I'm like you, I'm trying to, always find deals, and it's all passive for me at this point. I don't have time to really be involved beyond that, but I built a nice network over the last, almost 6 years working with property owner investors like yourselves. And all the deals I've invested in have been people that I've either done a project for or done a project kind of adjacently, and we met through that interaction. I think I'm in maybe like 1,500 units currently, which it's a big number, but on the passive side, it really doesn't really mean much realistically, but fairly balanced. Most of my stuff's across Texas, and then a little bit in Oklahoma City as well. So that's a little bit about me. So just wanted to give you guys a little behind the curtain. So, who's National Flood Experts, right? Give you a little bit of an idea, but we're really the only company of our type, engineering company that specializes in just flood zone cost savings. Like there's a lot of, I would say, like a lot of groups that may do like one piece, maybe they don't have the whole buffet. And so we're an engineering company by definition. So we don't write any insurance, but we partner adjacently to all these other industries. So JT and I have known each other now a few years, and so we'll partner with guys like him to be an extra value add resource and an extra layer of offense to help find some cost savings for these deals. Just some fun highlights that are nice to throw up. We're over 20 million now in cost savings, which is a really cool stat to throw out there. 3,000 plus projects. I mean, it just gives you an idea of the magnitude of these projects that are out there, and we're just scratching the surface. I think we're in 46 states that we've done projects now. I think we're missing the Dakotas, Wisconsin, and Alaska. So maybe somebody on this call has a deal in one of those states, and you can help us check off those boxes. So, talking about tonight, everything is in the mindset of it's all about cost savings. So we really want to educate everyone. You may not own a property today in a flood zone, but it's inevitable given the magnitude across the country of where flood zones exist. It's inevitable you're going to run into one at some point. So, want to really teach you kind of what to look for, how to think about it. They're not all doom and gloom. They're not all tragic and, sunken costs. But you want to know what you're getting into. So we'll talk a little bit about flood zones. When you have a property in a 100-year flood zone, even if it just touches a small corner of a building, lenders have a federal compliance to require flood insurance. And so we'll get into that a little bit deeper. But this is basically the formula. Most people on the commercial investment side that carry flood insurance, it's primarily because initially the lender said, you don't have a choice. You want this closing, you've got to show me proof of whatever flood insurance that type of loan is requiring. We're going to talk about NFIP. It's the National Flood Insurance Program. They've just had, in the last 2 years, the biggest overhaul that they've had in the last 30 plus years. So they totally revamped how they're rating flood zone properties around the country. There's a couple really important things to understand there. And then we'll talk about some solutions. Really, I've got some case studies that we'll talk through. That's really the simplest way to kind of understand it situationally. But some solutions that can help create some huge NOI on the deals. And the great part about what we do is we get to be like Santa Claus, basically, because these are all unexpected cost savings. Very seldom is somebody like building into their underwriting, oh, we're going to do this flood zone project. It's almost always bonus NOI on the deals, which is quite nice when you've got all the other costs these days working against you. So, one thing I want everyone to really think about too is like at any point when we're talking about some of these different scenarios and solutions, this applies to the entire life cycle. So we work with acquisition teams, we work with people that have existing assets going into the refi cycle, and then working with investors when they're preparing to exit a property as well. At the end of the day, we're just trying to help create as much value as possible. And I think some of the case studies will shock you on the magnitude of what some of these projects can look like. And like I was saying earlier, this is everywhere. This doesn't matter what state. Maybe I need the Hawaii floating out here, because we've done numerous projects in Hawaii actually. So the thing about this too is like you want to really open your mind is that flood zones are not perfect, and flood insurance policies in the way that FEMA has done their new system are also not perfect. And so there's a lot of things that really we're doing to help optimize and do some enhancing to be able to get you in the best possible position that the data will allow. So, sorry, I hit my button. I went backwards. So let's just talk about flood zones for a minute. This is just pure education. Maybe you've never seen a flood map before. So this is a property that we did a recent project in December. But this just kind of gives you a nice visual. So this is a cool picture because it has a whole lot of detail all in one little snapshot here. So if you can see this blue area here, and I know it's kind of a janky photo because I zoomed in so closely, but this blue area here, this is the 100-year flood zone. Now, if I zoomed out, you'd see that it almost doesn't touch this property at all. This is a property, DFW area, had I think maybe 6 or 7 buildings, but you can see this brown area. Well, this brown area is the X500, meaning that it's not considered part of the 100-year, but basically it's enough of a risk that they're at least drawing attention to it. So within the flood map, think of it like an onion. You've got different flood elevations built within a flood map. And so the 100-year flood zone is going to have an elevation to it. So you can see these numbers here, 520, 519.5. And then there'd be a flood zone elevation that they would suggest for the 500-year. And then this area that doesn't have any color, this is beyond the 500-year flood zone. Now, for the sake of conversation tonight, you really just want to understand that anything in the 100-year, this is what's going to be required by a lender. Anything that's in this brown area or beyond is not. Now, this kind of striped area over here, because there's this creek that runs, adjacent to the property. This is an area that has been deemed a floodway. Now, this is by the Army Corps of Engineers. So these areas are very protected from a development standpoint. So if you're ever buying a piece of land, and we'll talk about this too, is like when you look at a property on a flood map, if you're ever having this striped area go across your property, it's going to be extremely difficult to build anything in some of those areas. And as the country continues to just space out, outside of these metro areas and getting into some of these tertiary markets for development, people are running into flood zones. And you'll see a really, approachable and desirable price for a piece of land. And then shockingly, people will find out that portions of that land could be in a floodway or in a flood zone. So this is something that gets overlooked and can be, pretty difficult to work around. So you see this building down here is building 4. I know it's kind of hard to see the corner a little bit, but this blue area just barely touches that building. And that's all it takes. Because when the lenders are going through the latter part of the loan cycle, third-party companies like CoreLogic or ServiceLink, there's like 3 or 4 main ones that do what's called a flood zone determination. And what they're doing is it's an automated process that essentially is just going in and flagging buildings that are either in the 100-year or not. And they do this with every single transaction that happens. And they have to have this on file. And so surprisingly, this building 3 also got flagged. So if you called me and said, hey, what do you think about this property? I'd say, well, building 4 is going to definitely have to be, is definitely going to have to carry flood insurance. But I'd say be careful because building 3 could also get flagged depending on how the flood zone determination comes back. And so ironically, these guys found out like 2 weeks before closing that they were going to have flood insurance, because initially talking through the process, they were told they wouldn't have to. And then sure enough, the flood zone determinations came back and had to purchase for these 2 buildings. Now, these guys had an agency type loan. We'll talk a little bit more about that too, but the loan types dictate the level of flood insurance that you have to carry. And so these guys had not only a primary flood insurance policy, but they had to carry limits up to the replacement value of these 2 buildings. And so they were paying about $10,000 a year total for the 2, which isn't great, but isn't the worst I've seen. And they were able to get FEMA to correct this. And so these guys now no longer have a flood insurance requirement. So we'll talk a little bit deeper about how that process works here in a moment when we get to the case studies. But this is something, obviously look at this every day. So this may look like, kind of just something abstract to you, but this is something that you want to add in. And I've got a due diligence checklist I'm going to give to everyone at the end of the discussion that you can take with you, and you can be able to pull your properties up on the flood map and be able to kind of look at this yourself as well.
So let me, I have a question on that. These guys clearly had a difficult time with the lender coming in at the last minute and dictating this. What can people do? And maybe you're going to talk about this, but a lot of the agents or sales brokers will come in and say, well, it's in a flood zone. And you just kind of say, no, thank you. What can somebody do up front? And like, I'm looking at this picture, I could see where the blue is, that's a green. Mm-hmm. Would you take a deeper dive then at that point before getting into the transaction? Because, quite frankly, they could have lost a lot of money. Mm-hmm. And that's that's what we do at Old Capital. We don't want anybody to lose money. So how would we advise? At what point do you advise to make sure that, this is not the flood zone and they would be supported? Because that's a terrible place to be.
Yeah, what happens a lot, unfortunately, is people listen to the seller, and the seller will say, I don't have any flood insurance. I'm not required for any. And then the buyer interprets that as the property is not in a flood zone. And there's a lot of times, even as obvious as this sounds when we're talking about it, pretty common, no one just takes that next step to double check that. And so when we talk to acquisition teams, we really want to coach them the minute that you're even starting to underwrite a deal, way ahead of when contracts are in place. Start looking to see if it's in a flood zone, or just kick it to us. I look at properties for people all the time takes me 30 seconds because I know where to look. And I'll say, hey, Mr. Investor, you should be aware that likely 4, maybe 5 buildings here are going to get required for flood insurance. I would go ask the seller, for a copy of their flood insurance. If they say they don't have any, well, you should definitely build in some costs, talk to your broker, and start building some estimations on the front end, so that you can be conservative, and obviously you can whittle that down as you go. But this is something that should be caught way before you're out of due diligence, in my opinion.
Yeah, that's a great suggestion.
JT, I mean, he's an exception, I think, because like he understands flood zones really well. And so someone like him, he's working on this in the early stages. But I know guys all over the country in the insurance world, and not everyone is as savvy and gives as much attention to this on the early stages.
Yeah, whenever I do estimates, I'll look at the flood zones. I won't go too in depth because if somebody's not going to buy it, they decide not to even put in an LOI, then it's not worth putting that much effort into it. But yeah, I'll definitely include the map and say yay or nay. And yeah, this picture is a great example because yeah, those 2 buildings are just barely touching. But sometimes it's pretty obvious. Like this is the entire complex is in a flood zone, and a lot of times I think that kills a deal. So especially if the owner's not even disclosing it. So yeah, good point.
And lastly, I would say that as a lender and using agency lending can get pretty expensive, just because their requirements are a little bit steeper and harder. So that'll also be something that you're going to want to have a question. How's the lender going to look at this? So
yeah. And DJ, I know you'll probably get into it, but maybe the owner's had it for 10 years and hasn't had flood insurance, but the flood lines can change, right? Just as you can change the flood lines to get the property out of it, the flood lines could change to now the property's in it, right?
That's correct. Yeah. So, I mean, flood maps only update about every 15 years. And the local municipalities are the ones that are in charge of maintaining those flood maps. And so, markets like Houston, New Orleans, bigger budget type areas where the flood map has a lot of significance, especially if there's been historic flood events, those areas are going to have a lot more detail. We still see flood maps in certain parts of the country from the 80s. That's pretty remarkable. And so you could imagine all the infrastructure and construction that's been done since then that's had an effect. And they're still using a flood map that's 30 plus years old. So there's a lot of inaccuracies in the flood maps, and it's not intentional. It's just that infrastructure and construction moves faster than the evolution of the flood maps. And so, if you go and build something and you elevate the foundation of a new building, FEMA at the federal level, they don't know that, right? There's no automatic change. And so, in situations like this, like if no one comes behind to make these corrections, this property would have had a flood insurance requirement forever. And the other thing I'll say too about, with the seller buyer scenario is that the seller situation is never going to be the same for the buyer. And so the seller may not have any debt. They may have paid the property off. They may have a local regional bank and they were able to negotiate some way out of the flood insurance requirement. We've seen that in cases, but most traditional lending situations, the flood insurance will get flagged immediately. And the thing about it is there's a lot of third-party information that's being used. It's not one person, trying to just pull one over on you. Julie's team has compliance requirements that they have to satiate. And so they're using third-party information. And that third-party information is then being weighed heavily. And if no one comes in to do an audit and double check some of this stuff, then things can just go on for several years. So we'll get into the details of how the process works, but the moral of the story here is that this particular operator now is 10,000 cash flow positive as of 2024 on this property, and there's going to be a whole domino effect of benefits that come from that. That's a few $100,000 in value that was just created with a simple project. I say simple because we do it every day. So we'll shift gears for a second, do a little bit more education too. And this is, objectively talking about some of the flood insurance changes that have happened the last couple of years. So FEMA, they launched this new, what they're calling risk rating 2.0, and they totally revamped their modeling for how they essentially weigh and calculate the premium for a building around the country. And so when all these properties transitioned over, the old rating system, you could think of it like a spreadsheet with a whole bunch of variables, and it was like one big math equation. And there were about 4 or 5 variables that really were the main multipliers. And they shifted how they're weighing these. They took some out, they added some new ones in. So we don't need to get into that level of detail, but what you want to understand really is a huge concept here. I know this is kind of tough to see the numbers, so I'm going to highlight one area specifically. So if you can see that, you may have to really get a little close to your screen there and squint, but this right here, this number is called the full risk premium. This is brand new. This didn't exist before in FEMA's insurance system. And what the full risk premium is, this is the ceiling price that FEMA has determined for this building. Now, you can see here over on the left, this coverage, 500,000. That's the highest that a coverage will go to with the flood policy through FEMA. And so most standard loan programs, they will want the NFIP max. And so if you hear that, that just means 500,000 for a commercial building. This would be 5 or more units. If it's like a duplex, quadplex, then that'll top out at 250,000. But when you look at this full risk premium, one thing you'll notice is that this number is higher than this number at the bottom. So this is what they're paying today, $1,352. And so underneath this box here, you'll see annual increase cap discount. And this is why you ask for the seller's policies, because it's possible there could be a discount in here that's being grandfathered in. What this means is that this particular person had a flood policy prior to this risk rating 2.0 transition. So if you go and buy a brand new policy today, they would start at the full risk premium plus all these fees at the bottom from day one. Well, what's interesting about flood insurance, different than all other insurance lines, is that flood insurance can be assumed at purchase. So you can actually take over the seller's flood policies. And so this really didn't have a lot of significance 2-3 years ago. This has existed for a long time, but 2-3 years ago, if your broker went and wrote a brand new flood policy, they should get the same number that the seller had. There wasn't much of a variance. But now that's not the case even close. So the policy that you write brand new could be 10x higher than the policy that the seller has. So this particular strategy is one I've really been making sure that people know that exists, because what can happen is you can take over this flood policy and adopt this discount. So you would carry forward at this 1352 price point. And now what's happening is that every year, this policy is going to go up 18%. That's the max that FEMA can increase your policy as you're approaching the full risk premium. Now, this is actually not that severe of a scenario. We have a client the other day that we're reviewing. They've got 30 buildings. Now, this is a condo building, different than multifamily. But their buildings are paying $4,000 or $5,000 for some of them, and the full risk premium is $35,000. That's massive.
Easily, right?
The condo is approaching $1 million is what they're going to end up topping out at on their flood premium in about 15 or so years. Now, why do I show you this? Because this is really the most important thing to understand on an NFIP policy right now, is what's the trajectory, the glide path that you're approaching with this policy. So if you're doing some forecasting, right, you're trying to underwrite what's your insurance costs look like year 2, 3, and 4. Can't tell you on the property side because we've seen how unpredictable that's been the last several years. But you can look at your flood policy here and you can forecast out knowing that this number is going to only stair step up so much. And then once a policy reaches the full risk, typically now you're only going to see probably 4 or 5% that can change depending on what FEMA releases every spring, but it's going to be a much smaller, margin that it increases thereafter. So,
DJ, I have a question. Actually, Mark has a question. What about private flood versus NFIP 2.0? What's the difference?
perfect segue. That's what I was about to say
Okay,
here
good.
next. No, thank you. So then over the years, you've had several different private groups, create a flood product and get into, the commercial insurance market. There's been several on the single family side for years. There's probably 5 times as many private options on the single family side, if I had to just guess. Private insurance is accepted by lenders just the same, I'd say in majority of cases. And so what you see typically is that with NFIP, you're going to have a policy for every single building. And so sometimes there can be a more advantageous price. A private carrier will put all the buildings on one policy. They'll blanket all the way across. They can still reach the coverage requirements that the lender has in place. And sometimes you'll see a combination. NFIP is the primary for that first 500,000. And then if the lender's requiring anything beyond that, sometimes your broker may go to the private market to then fill that gap. So if you need $1 million per building, well, NFIP here can cover the first half. You may have to go get a private policy for the other, say, 5 million. If it's, say, 10 buildings, for example.
Yeah, DJ, it seems like 80% of the time we're not using just NFIP. There's always some sort of private that we have to go to. It's just because the building values are so high now. So NFIP just won't cover everything.
That's right. And so, your brokers are going to do the best they can do in terms of finding the right combination to get the best price for the coverage. One thing that's really important to understand, and this is why I left this to be second, is so if you get a more advantageous price on the private side, right? One thing you want to consider is what is the full risk premium that you're paying currently on the policies that you do have? Because if you leave the NFIP, so I get this nice price down here of $13.52. I go to the private market, and then let's say in a year or 2 years, for some reason, I get a non-renew, meaning that private carrier has decided, we don't want your business anymore. Sorry, you have to go somewhere else. Not saying that happens all the time, but it can happen. Voyager, if you've ever seen or heard of that company, they were non-renewing a ton of their Florida clients last year. And so they had to go back to the NFIP. Well, what happens now? Well, in FEMA's new system, they start at this full risk premium immediately. So they would jump immediately up to that higher price. But here's the thing. If your policy is already at the full risk premium today, well, sure, there's no real damage there. Get a better price with the private market, switch right over. If that jumps up or for whatever reason you need to come back to the NFIP, it's going to be more or less the same when you left. So just little tidbits to know. You don't have to be an insurance expert, but it's good to know a couple of these caveats, to be able to have really good conversations with, whatever broker you're working with. So any questions on the NFIP here? Let me open up the chat just in case.
There was a question about, Jim had a question. Can you clarify that the actual building structure needs to be in a flood zone, not the land?
That's right. So the only thing that gets required for flood insurance is 4 walls and a roof. That's the simplest way to think about it. So you won't have a lender requiring flood insurance if like the parking lot is in the flood zone, for example. Now, if you've got like a mail kiosk, we see those pretty commonly in older properties. The mail kiosk will get required for flood insurance, as silly as that is.
Wow.
But like a carport shouldn't. Every once in a while that gets mistakenly done, but any kind of building, even if the flood zone only barely touches it, that's what's going to get required by a lender. Now, let's say you're buying a property in an X zone. There's no requirements. You can still buy flood insurance just the same. The lender is only dictating the coverage limits if it's in a 100-year because of their compliance requirement. But in general, I think most people are still using FEMA's program for their flood insurance. And then every year we've seen more and more and more private options getting into the mix as well. All right.
Those are all the questions I had.
Perfect. So let's jump into some case studies, right? Sometimes the easiest way to understand some of these solutions is really to just see a real example that could be a deal like yours one day. So this was a new acquisition that someone came to us with over the summer. And so this was an interesting case. They had 5 buildings. They were going into an agency debt scenario from the start. Lucky them, fixed rate, right? And we knew the closing date. So anytime someone calls us and they tell us that they are in contract for a deal, we start asking tons of questions, right? Because we want to understand from a real estate side, what's the scenario we're working with? So what kind of debt are they putting in place? What's the timeline? What do we have from the seller? All those things. And so then in this case, we knew what they were required from the lender. We had 5 buildings. When we looked at the initial data, our team does a desktop review. It's like no cost. So there's really no damage for our team to just put some eyes on, one of your deals. And we immediately knew that 3 of the buildings, we had enough information that we could go to FEMA. There were 2 buildings that were marginal. There was some data that, we really needed to collect to be able to have a strong enough case to try and get all 5. So we have field guys in-house, so we go all over the country, collecting the raw data that's necessary. So we flew out, we were able to then get enough information to qualify all 5. Now you could see the number. These guys had a hefty cost coming in, $50K. This was no joke. This was a major disruptor in the underwriting of this property. And so fortunately, this particular property fit a scenario where we're able to use our expedited processing. We have a particular relationship with FEMA to be able to get some of these projects approved, believe it or not, in as fast as a week. Comes in really handy when you're backed up against a closing timeline. Other projects, maybe 4 to 6 weeks as an average timeline. So still not terribly long. But these guys were looking at $1 million in property value to be able to add to this deal from day one. And so working with these guys, we're able to get with FEMA, get this whole thing approved. Now, when we talk about this, all federally backed loans, they follow the same process. So with that flood zone determination form that they keep on file, when a letter of map amendment gets issued, which is what happened in this case, this is FEMA saying we're issuing an exclusion for these 5 buildings. We didn't change the flood map. Flood map still looks the same. But we're saying that these 5 buildings, they had characteristics that basically would put them outside that of the 100-year flood zone around them. And so they issue an amendment for those buildings, and there's a federal case number, legal description, all that's very specific to those buildings only. And then when you give that to your lender, what they'll do is have the flood zone determination forms updated. And now the form will reference the LOMA case number. And there's a real simple box on there. It almost seems like too black and white, but it says, is the property in a special flood hazard area? Yes or no? This is the box. If yes, underneath it says flood insurance required. If no, flood insurance not required. Like, it's so simple when you get to that point, really, but they check no, and then at that point, your lender sends you an email or a letter back saying flood insurance is no longer required on these buildings. Now, the best part about this is that this actually lives with the property, and it's good for the life of the flood map. So if you sell the property in 2 years, so long as nothing's changed in the flood map, it will transfer automatically to the next owner. And like I was saying, the flood map's only being updated every 12 to 15 years. Most map amendments continue to be valid in the next flood map. It is possible that something on the infrastructure side worsened an area and a flood elevation can go up. That happened here in Tampa, actually, along a lot of the waterways. So there were LOMAs that had been done in the past that were no longer valid at that point. And then all the lender requirements would come back. But, again, in my almost 6 years, we've seen very, very, very few of those scenarios. So this is something that in every deal that has a lender requirement should have someone like us look at this property to do an audit and see if this is possible. Because
so I'm sorry to interrupt you, but would it you wouldn't necessarily have to reach out if it was in, let's say a populated area of Phoenix where it's dry and stuff like that, right? You wouldn't necessarily reach out at that point. But if there's some thought that it might be, then you would. Is that right?
I say everywhere. We've
Oh,
done projects in
really?
Phoenix, done projects New Mexico, Arizona, all these dry areas. Yeah, the flood zones are everywhere.
Yeah,
And
Julie, the where I see most of the flood zones are in the desert because the
Yeah.
the water doesn't drain. It's so flat that it floods all the time. So yeah, if you look at Phoenix, New Mexico, West Texas, there's flood zones everywhere. It's crazy.
But if you, I guess you'd be looking at a map anyway, right? And
Mhm.
you would look for the flood map in itself. So you can't make any assumptions that
Right.
any of these properties are in a flood zone. That's a great piece. Thank you. Thanks for
Yeah,
covering that.
and any property there could be potentially a solution. Like right now we're talking about the flood zone. We'll talk about the consulting side in a second, but our lifetime batting average, we've been tracking this since I started with the company, and we look at it every year, and it's right at 50% of the properties we look at nationwide, we find a cost saving solution for. So it gives you an idea of the variance of data that's being used around the country. And it's at the expense of you, the owner, right? So there was something in the flood map that, with their broad brush that they're using, the flood maps are up here flying with the 747s. And then, we're doing this analysis at the building level. So you're doing an extra layer of correction. And that's why FEMA has this system, because they know their maps aren't perfect. So
We got
moving
about 10
to
minutes. We got about 10 more minutes, DJ.
perfect.
Okay.
Perfect. Refinance is a very common scenario, right? Multifamily built into a lot of different strategies. And so this was a case where similar scenario, don't have to go through all the details, but they came to us and were able to reduce the flood premium by 30K. This was a map amendment, just the same, but it was a different situation on the real estate timeline. So these guys, having been able to reduce the NOI, a few months ahead of the refinance, they were able to recognize this in their valuation. And I had a conversation with them after this all went through, and he was like, "Yeah, we got an extra 600 grand in the cash out, just simply from a 30K savings on the flood insurance." And so these are some things, and that's why I say the life cycle is so important, is that if you have this requirement, definitely want to get some eyes on it, because you might be surprised that your property may have some opportunity too. This was up in Washington. So, it's everywhere. Last example, and this one's a little bit different. This is a multifamily, but this is a company that you probably have shopped at, or maybe had some work done at a house or a property. These guys had a massive portfolio. They've had flood insurance for years on a lot of their different, locations. And so we did do some map amendments for these guys. But what we also did is, when we were going through all their policies, we found that FEMA had made some assumptions on some of their policies incorrectly. Wasn't anything their agent did incorrectly, but when we really broke down all the engineering details of the policy, we found some ways to be able to really reduce some of their premiums. And this is the insurance consulting side that exists. I think we're one of the only groups that really looks at it this way. And this is where we partner with the insurance brokers to help them with a lot of their renewals, to see, is there anything that can make a dollar savings? And this is all within FEMA's new rating system. Now, you had millions and millions of policies that just transferred over to this new system overnight. And it's impossible, right? Everything with the government works perfectly, as I'm sarcastic. So this is my point here, is that it's really being open-minded. It doesn't matter what situation you're in. You want to have somebody really digging into the details. And if you've got this requirement, because you might be surprised to find in your portfolio, these guys had 200K in savings. I mean, I don't know. That's real money. I don't know if 200K is a lot to, a super large corporation like this, but the guy was really, really excited, to say the least. So thing about it is that as you're in your due diligence cycle, right, you're looking at this from the beginning. If you're into a property already, then you want to make sure you get to it as soon as possible. And if you're thinking about selling, well, then you want to double check this too. No matter what stage you're in, there's a potential benefit here, to be had. So that's really it on the case study side. So I wanted to leave a few minutes there. If there's any other Q&A, I think we covered a couple things.
Yeah, let's, if you wouldn't mind closing that and bring us all back. Let's see.
Let
I
me
guess
pull
that's
this up
stop
real
sharing.
quick.
There we go.
Oh, I got one more slide real
Oh,
quick.
sorry. Take it
No, you're
back.
okay. If anybody would like,
Oh, good. I was going to ask you about that.
yes, and I'll throw this in the chat too, but I left this up here real quick, this thing in the middle. If you want to scan that, that's actually a due diligence checklist that we put together, just a PDF. And I can send this to you. I don't know if you have everyone's.
Yeah, that would be great. I send out on Friday mornings. Everybody, if you are connected, you've registered for Zoom at 8. Any documents like I don't know if you're going to give us this presentation, but
I can.
like this would also be helpful. We'll put it into that email for everybody.
Perfect. Yeah. So these are here. There's my contact. I'll drop it in the chat, but give you everyone 10 more seconds in case QR codes aren't your
that's great.
everyday thing. But cool thing we put together. And then this is just a scheduling link. If you'd like to have a further conversation, go there or shoot me an email. So
Hey, and Julie, I just want to reiterate that when there's a lender requirement and they're in a flood zone, we do the best we can to try to negotiate and get that down. But without proof, there's really not much we can do. At that point, then we're order takers. They're telling us how much limits we need to have, and then we go find it, right?
Yeah.
So if there's another DJ is the only one that I know that does this. So he's part of our super team, if you will, to help get these down. Then if you've got another broker out there that says that they do this, I would really question it. DJ is boots on the ground a lot of times too, and has the engineering to get these lines actually changed rather than just kind of negotiating the best they can. I guess he actually brings the proof.
I mean, this is just so fantastic. I got to tell you, these are little details that you're not going to get on the street. You might not get it in a education program. The fact that you guys are all here, this is another way to protect yourself, to build your network of superior vendors, and then also bringing capital to your transaction in an NOI position. So,
well,
DJ,
and how many people? One more thing: how many people walk away from properties because they find out it's in a flood zone, where you could just make a simple, email to DJ, and then he said, "Actually, we can help you." And then now you've got this property that everyone turned away from that it's actually looks like it's going to be great. So
amazing, yeah. Let me see if there's any other questions. Unless not, HOA, okay.
one thing I'll add to JT's point is that a big objection that we get a lot of times, because our team will reach out to property owners and they'll say, my insurance broker already looked into this. And they're commonly misunderstood because their broker may be doing everything they can do on the policy side, but you don't really see insurance brokerages that have engineers on staff. And that's really the big difference here, is that you've got engineers that also are insurance experts. And that's really where you want someone really digging into it. Somebody asked what our fee structure is. So we operate on a contingency basis. So after we review the project, we'll give you a project estimate. A lot of times there's some relative fee to the annual flood premium and the savings we'll create. But you'll know this up front. If you put a contract in place with us, we guarantee the success of the project, be that with FEMA or with the insurance carrier. And if we're unsuccessful, then we don't invoice, for the project.
Fantastic. Any other questions? Paula, was there something you had a question on? Do you cover HOA insurance? That's an interesting question.
So HOAs are interesting because a lot of times the association will own the flood policy. And so if they have to include all the units, could be a townhome situation. It could be a high-rise condo. but the solutions apply just the same. You know, if we're able to have a building out of the flood zone, it'll remove the requirement for that building or number of buildings. Or if you can find a way to optimize the flood rating so the policy cost comes down. So this is all assets of real estate, not just, you know, any one class.
Fantastic. All right,
Thank
one
you.
last question. Anybody? I don't want to cut you off. All right.
Thanks.
Well,
Thanks for all staying awake. I know flood zones aren't the most interesting.
hey, listen, if I can save money, I'm going to find any way to do that. It could be boring. If I can put money in my pocket, I'm going to listen. So, DJ, that was fantastic. You created so much value for my audience. And remember, just pick up the phone, send DJ a email. It's that easy. Okay. It could save you a ton of money.